Welcome back. So today we are going to start with this another chapter and some of the topics you can say which we are planning to cover. So first of all, we'll talk about this auditor's responsibility in relation to fraud. We can say a very important consideration as far as audit is concerned. And when you talk about fraud, in terms of the risk which exists around the fraud in the financial statements. Okay, so therein it becomes extremely important in terms of its evaluation. Why? Because when you talk about this fraud risk, it happens to be a significant risk. And in terms of the material misstatement, so if left suppose fraud is there, so it can put a big question mark and it can have a huge implication as far as the reporting requirements are concerned. So SA 240 talks about it, and we'll cover about this fraud. The other one will be in relation to the laws and regulations. So of course, when you audit an entity, various aspects you will cover. You will cover the processes, you will cover the controls. You'll not only look at the numbers which are involved, but the compliances also which are involved. So therefore, when you talk about the compliances which are involved in respect of the laws and regulations, so what is it that the auditor is required to consider? Okay, so that's something we are going to look at. Next, we'll talk about SA 260. Again, a very important area. And in today's times, particularly with the kind of development which is happening and the environment, the way it's sort of evolving. So there is a huge focus in respect of this communication of the auditors with TCWG. So you can say theoretically as well as practically, it's a very important area for the consideration of the auditors. Yeah, and we'll talk about the practical gaps as well as to what is really required to be covered and what is actually happening. Okay, and why this auditing standard becomes extremely important in such a situation. And then we'll look at joint audit and of course the considerations whenever any third party is involved, or you can say a service organization is involved. So what are going to be the auditor's considerations? Yeah, so you can say even though we are covering this chapter, okay, it happens to be one chapter, but of course there are a lot of topics we are covering herein, and that's why it's going to be quite interesting, of course. Yeah, because some of these topics are very important. At the same time, they are also very interesting. Yeah. Okay. So now talking about the fraud. So now let's talk about this aspect related to the fraud in the financial statements. Now let me just share one document with you. Okay, so now let's talk about fraud. Now, it's important to understand what is this fraud and what are the responsibilities which the auditor will have. Okay, so when you talk about audit of the financial statements, so the question arises, is the auditor responsible for detection of fraud? So that's something we need to consider. Yeah, that's one aspect. Now, if let's suppose this is required to be considered, so when do you do this? Yes or no? So therein, we can say in a way we are talking about the planning stage, right? Why are we talking about the planning stage? Because when it comes to the risk assessment, now in terms of the risk assessment, what is the factor we are considering? We are considering the factors which may lead to fraud, or you can say we are going to evaluate the fraud risk. So if let's suppose there are some errors in the financial statements, so we can say there can be two categories. Okay. Or when you use this term misstatement in respect of the financial statements, you can say there again, there can be two categories for those misstatements. Now, what is that? One is something which you call as unintentional errors. Yeah. So something which you'll call as error. Okay. Now let me just call it as unintentional. And what if the error is intentional? So will those be required to be considered? Answer is yes. And that's where we move into this fraud risk assessment. Okay. So that's why in relation to a financial statement, we are required to assess both intentional as well as unintentional. Now, the problem is that when it comes to the intentional mistakes, because those are made intentionally. Yeah. So that's why they become all the more difficult for the auditor to pick up. So let's suppose if the auditor were to look into it, auditor were to find out, auditor were to examine. So because these are intentionally done by the management, by the employees, by the entity, so that's where the challenge lies, right? So now let's talk about the understanding of the fraud. Now, why would a fraud take place at the first consideration which the auditor needs to have? When the entity, you can say the employees, the management, they will have some opportunity. Yes or no? Say controls do not exist in the organization, or the controls exist, but the controls are weak. So in such a case, what will happen? Of course, the chances of fraud will go up. Yeah. If let's suppose the top management is not really bothered, they are not really worried as far as any of the thing which may go wrong in the financial statements in respect of financial reporting requirements. Yeah, so something that we discussed earlier as well, that we call as wherein the top is leading from the front. What if there's a poor tone at the top? So what will happen? The middle management, the lower management, the employees, they will all understand that the management or the top management is not really focused at all. And that will provide them the opportunity to get into some sort of these types of activities wherein they commit fraud. Yeah. Similarly, when you talk about the financial statements, so what may happen? Maybe the accounting policies which are framed, they are inappropriate. Okay. So why are they framed? Why are they set up? For the purposes of, you can say, misleading the financial state, the stakeholders who are involved, or you can say somewhere the financial statements which are prepared, which are presented, what will happen? They are having those sort of errors. Correct. At times, what may also happen is, see the way the organization is structured, or let's suppose if you talk about the compensation, say of some of the employees, maybe a particular category, maybe the management is what? Let's suppose that's linked to sales. Yeah. Now what will happen? They will always be inclined towards achieving that number as high as possible. Why? Because higher the number, higher the compensation. Yes or no? So that's what you call as, at times, there could also be an incentive which is leading the management or the employees to move towards this fraud. Okay. And at times, there could be some concerns. Maybe the employees are frustrated. Okay. Maybe the upper management is doing it. And that's why the employees consider that if, let's suppose, the top management is involved in some sort of, you can say, wrong activities, so why not us? So that's an attitude, you can say, which could be there, which can sort of flow like culture in the organization. Okay, so these are some of the instances, some of the situations, some of the reasons as to why the fraud may arise. Now, what sort of fraud may arise? So we can say there are two categories. One is misappropriation of assets. Now, what do you mean by that? Say there's a cash embezzlement. Say the assets of the company are stolen. Generally, you find that concern in relation to inventory. Yeah, so you can say inventory is a very common example. Now, as far as the misappropriation of assets is concerned, we don't see that happening in respect of, say, the plant and machinery. Okay, or you can say big size assets. Why? Because it's not something easy for anyone to go pick up the machine and run away. Yes or no? So can somebody run away with the plant? No. So that's where when we talk about a particular category, misappropriation of assets, therein you will find these small value assets or maybe the small size assets particularly are the ones which will get covered. And then we have this another category which we call as fraudulent financial reporting. Now, what is the concern as far as fraudulent financial reporting is concerned? So, put it very simply, we can say financial reporting is not appropriate. Means it's not done the way it's required to be done. Say, for example, company wanted to inflate the profits. So, what can they do? They can overstate revenue. They can understate some expenses. Yeah. Similarly, maybe the company wants to understate the profits. Why? Because let's suppose taxation is the consideration. In such a case, what do they do? Similarly, now they can understate the revenue. They can create excess provisions, for example, book more and more expenses. Yeah. The company can have accounting policies which are supporting the accounting which they want to, and which may not be in line with the accounting principles, accounting standards. Yeah. So this is again a very common situation that you come across. Okay. The error in the financial statement is very common. And we are not trying to sort of associate each and every type of error with this fraudulent financial reporting. The important point is when we talk about fraud, it's something which is done intentionally. Yeah. It's a deliberate attempt on the part of the entity, its employees, management. So it is something which is done knowingly it's wrong. So that's what the auditor needs to be considerate of. Yeah, so that's what the auditor needs to consider. Now, what are the fraud risk factors you may have in relation to an organization? Let me just open one working file also. Just give me a minute. Wait just a minute. I'll open the working file. Okay. Yeah. So what are the fraud risk factors you may get to see? You can say some of the business risks which could be there as far as the auditor is concerned. So that's what you need to be considering. That's what you need to be looking at. Maybe it's about the weak controls. Say absence of anti-fraud policies in the organization. The culture is such. Okay. Let's suppose there are some dissatisfied employees who have access to desirable assets. Another very big problem would be in respect of lack of job segregation, independent checking of key transactions. Okay. So this job segregation helps a lot. Why? Because if let's suppose you have this maker checker kind of arrangement, even though it's very basic, very simple, but it's a good check to be in place. Yeah. At times, as we discussed, there could be significant pressures on the management to obtain additional finance or to achieve some targets. Why? Because their compensation could also be linked to the numbers which are getting reported. Say there is an unauthorized access to the systems by the employees. Now, what do you do? So that sort of risk as an auditor you need to evaluate. See, all of these risks auditor needs to consider. It may exist. So it's not something that it's a kind of checklist we are discussing over here. Of course not. These are only examples. And these will be again situational. But all of this will form part of what? Risk assessment. So actually, when we talk about risk assessment, so therein one of the elements involved will be what? Fraud risk. Okay. Yeah. So that's what the auditor needs to consider. Auditor needs to evaluate. Now, as far as the fraud risk is concerned, there are a couple of areas in the financial statements which are considered to be presumed fraud risk. Now, this is an important presumed fraud risk. So we are not saying that it's a presumed fraud or the fraud will always be there. But when we talk about the areas, so it's presumed fraud risk may be there. Yeah. So that's why when it comes to areas like revenue recognition, again, a very, very important area in the financial statements. Management override of controls. Therein, the auditor will not check whether there's a fraud risk or not. Auditor will have to presume that the fraud risk is there and accordingly plan the audit procedures. Yeah. So the responses to the fraud risk which the auditor will plan. So what will happen? Auditor will have to structure the procedures accordingly. Okay. Now we'll talk about this revenue recognition management override as well. Particularly as regards this management override, it's one of the areas which becomes very challenging at times. And practically this is quite challenging. Okay. Now let's look at it from the perspective of the auditor. Okay. Now auditor is auditing an entity which is effectively looked at by the management. Management has set up the controls over there. Now, a situation wherein the management is overriding its own controls can be extremely complicated for the auditor to handle. Yes or no? Yeah. So that's why some of the things which the auditor will have to plan. So that's all going to form part of the planning procedures in respect of audit. Now, what are the events you can see, or some of the examples we can say might be there in relation to fraud? So as we talked about, inventory is a very common thing that you come across. Missing documents, duplicate payments, okay, in respect of processing of bank payments. At times receipts of maybe the bank, at times cash. That's where you see a lot of concerns as far as the fraud is concerned. Adjustment entries, something which you call as manual adjustments, are particularly a term which is used for that happens to be the journal voucher. As to what are the reasons, okay, if let's suppose things are generally system driven, okay, so why do you need to intervene? Why do you need to really bypass? So those are some of the thoughts which the auditor needs to have in place. Now, these are some of the examples. We have already talked about it as to the type of fraud we may have, as to what are the examples. Now, the question arises, what are going to be the procedures which the auditor needs to have in place in relation to these fraud risks? Now, these are again going to be situational. There's again no standardized answer, but the approach is quite standardized. One thing is for sure that this will require a detailed assessment by the auditor, wherein the senior members of the engagement team need to be involved. Okay, so something you can say, a discussion which has to be led by the partner. Why? Because the importance of this area is such. When the partner can have discussions around some of the situations in relation to that particular company, or maybe some of the other experiences he can consider for such evaluation. Yeah, so that will be quite helpful to begin with. Yeah. JE testing. Now, this is again a very important procedure. JE means journal entries testing. Now, in this case, what do you do? In this case, you will pick up some parameters, some criterias for the testing of the journal entries which are falling within those criteria. What are going to be those criteria? That's something which the auditor will have to evaluate. Let's suppose organization has a policy. An accounting entry is passed by employees up to manager level and approved by senior manager and above. Let's suppose that is the example. So you do not find senior manager and above involved in passing the accounting entry. But what if there are few accounting entries during the year which are passed by the CFO? Okay, so that's something you will want to examine. You will want to check as to what are the reasons for that, because that could be something unusual. So over here, what are you trying to assess? Something which is unusual at times. Okay. Now estimates again is an important area. Now estimate is something wherein 100% accuracy is not possible. And it's always based on assumptions. Now, what if those assumptions are wrong? Why? Because the management is in a position to manipulate this. And it's very easy for the management to deliberately report these estimates in a manner they require. So that's where you find this manipulation easy. And that's where this is one area which has to be an area of importance for the auditor. Yes or no? Yeah. Because that's where you may have some sort of situations like this, which may require the auditor to have some sort of consideration. Now, when it comes to fraud particularly, there are some reporting responsibilities which have also been placed. CARO is one. Then, of course, you have this in the main audit report as to how do you really go about it. But this area is such that it's extremely important for the auditor to look into, auditor to get into such type of details. And of course, when you talk about the reporting, so this reporting is not really linked to the frauds which are identified. What if that is suspected? Okay, so at least TCWG communication becomes important. Yes, sir. And even if you are getting into the evaluation, this communication with TCWG is again a very, very important consideration. Yes or no? Yeah, so these are some of the things which the auditor will have to anyways get into. Okay, now moving further. Now we will talk about, just give me a minute, just move further. All right, so there we go. So now moving on to the next area. Okay, so we'll discussed about this fraud. Now talking about the consideration of law and regulations. Now, when you talk about a financial statement, what will happen? As a management, you need to consider some of the factors. Okay, some of the factors like processes which are involved, and in terms of the transactions, in terms of as to how those are really required to be accounted for. Yes or no? That is where the laws and regulations are also important. Why? Because the way the financial statements have been drafted, consideration around that on the part of the management would have played an extremely important role. Yes or no? Now, in relation to the compliance for the same, can we say it's required on the part of the auditor? Answer is yes. Why? Because what if there is a non-compliance? And that non-compliance has something which can impact the financial statements. So will that be a consideration on the part of the auditor? Answer is yes. Now, when you talk about some of the industries which are quite significantly regulated, say for example, that is where it becomes all the more important. Yeah. Now, when you talk about compliance, so to begin with, it's the management which is responsible for its compliance. So are we saying that it's actually shifted to the auditor? Answer is no. Okay. But yes, of course, as regards the audit, as regards any of the non-compliance which could have been there in the financial statements, auditor needs to look into it. So again, at the time of planning the procedures, the auditor will draft some of the laws and regulations which are applicable to the entity. Okay, impacting the financial statements, of course, and which will always impact in some way or other. So we can say this again is an important consideration. Yeah. So that's why auditor needs to look into some of these laws and regulations and structure the audit procedures so that any of these type of situations which would have been there are picked up by the auditor in an appropriate manner so that those are not really missed out. Those are taken care of by the auditor. Okay? Because that again will play a huge role as far as the financial statements are concerned. Okay. Now, let's talk about the joint audit quickly. Now, what is a joint audit? So we can say it's an audit of financial statements wherein the audit is performed by not a single auditor, but two auditors. Okay, now let's try to understand this concept of joint audit. Because at times there could be a confusion on this. See, joint audit means there are two auditors. Now, what do you mean by two auditors? So that's something which is important. So say this is one company. Now this company doesn't want one auditor. So what do? Say they have appointed two auditors. PQR and company, and let's suppose MNO and company. We are talking about two audit firms. Now these could be the partnership firm. This could be the sole proprietorship. The way an auditor is required to be in place. So the same thing will apply over here. The whole idea on the part of the management is what? They don't want to have a single auditor. They want to have more than one. Now, in this case, what will happen? Can we say that the financial statements are going to be double? Can we say it's something which is going to be audited twice? So that's why the effectiveness will increase. Yes or no? Because that could be the thought process. Okay. Now let's understand, because the company is one, so the financial statement is one. And the management is not intending to get into a duplication. That first of all, PQR will come, they will audit everything. MNO will come, they will audit everything. No, that's not really the intent of the management. Now, why you may have a situation of a joint? Let's suppose ABC is operating in a particular industry which has some sort of complexities, which has some peculiar requirements, wherein they believe that some sort of specialization in relation to that particular area may be required on the part of the auditor, which both the audit firms may not have. So, what do? You will go with two, because individually these firms do not have, but if you bring them together, that's where the objective will be achieved. Now, how does it work? There will always be a division. So, you can say PQR is going to audit a part and MNO is going to audit the other part. You can say this scoping is something which will have to be agreed, decided. So it will be a tripartite sort of discussion wherein the auditors management sit together. They decide as to what is going to be the scope of the work of both the auditors or maybe the joint auditors. Some of the areas might be common as well. But what is the purpose? Purpose is to bring in more efficiency. Idea is not to get into a duplication. Okay, so that's not really the objective. Now, when you talk about joint audit, so of course, it will have some benefits and it may also come with some sort of challenges. Why? Because now let's think about a company. See, in today's times, when we talk about a company planning to go for a joint audit, so basically it would mean a large company. Yes or no? So we'll of course be talking about a large company. We will not be talking about a small company. Correct? And for a large company, the audit is always going to be time driven. Now, if let's suppose ABC were to coordinate with only PQR for getting the audit completed within the timelines, so it's all about within the timelines. Is that a challenge? Yes, it always is. See, any project, any work is a challenge. Now, on the top of it, what has happened? ABC is now required to coordinate with another auditor for the same set of financial statements. So even though their scopes are defined, but still it's one thing which has to come out. Yeah, so that sort of complication definitely gets added when we get into this sort of situation of joint audit. Yeah, but is it a complication always? No. So again, as we talked about it, it will have some advantages, it will have some disadvantages. So it may work either way. So both of those considerations are required to be looked into. So if you look at this definition now, so a joint audit is what? It's an audit of financial statements of an entity by two or more auditors. We are not limiting it to two. It's more than one, very simply. Yeah, but generally you will not have 50. Okay. Generally you will have two, three. So that's how the joint audit you will get to see. Okay. Now sometimes it's mandated, say by a regulation. Say for example, if you talk about PSUs, they are generally required to have more than one auditor. When you talk about a company which is not a PSU, or say which is a private company, they may want to have joint audit. So it can always be a voluntary requirement. And management needs to think about it in such a situation. Okay. So it can arise both due to maybe any sort of regulatory requirements, and of course, it can always be a choice of the company. Now, audit planning, risk assessment, all of these things, they are going to be completed in a similar manner the way any other audit will be done. See, the audit is audit. Yes or no? So are we now changing the audit? No. It's an audit of financial statements. The only thing is what? Now, instead of one person doing this, it's being done by, say, two persons. Okay. So that's why, to begin with, what will be an important thing? Division of audit areas. So identifying the division of audit areas and common audit areas amongst the joint auditor in terms of their scoping becomes extremely important. You can say that's the starting point. Otherwise, there will be a confusion. Otherwise, it's something which is no show. Okay. And how do they do? So basically, it's a discussion wherein the auditors sit together, they decide what is going to be the common thing and what is going to be the scoping that they want to get into. Yeah. Now, as far as the scoping is done, if let's suppose that's all done, discussed. Now, when it comes to the planning, when it comes to the risk assessment, now all of those things on the basis of the scope of work of the auditor, what will happen? They will be doing their own planning. They will be doing their independent risk assessment. So that will not be a joint discussion. Of course, they can always talk to each other. So nobody is stopping them. But of course, idea is not to get into a duplication at the same time. Yes, no, that's why it's pre-agreed. But if there is anything which they believe is requiring a joint discussion, why? Because that will help them in executing the specific area which they have chosen, which they have selected. So they can always do that. Yeah. So that sort of consideration they can always have. So that's why in case of a joint audit, this coordination by the management. Why? Because the common person is who? It's the management. Yeah. So they are forming the base for these audits to be completed, sort of. So that's why this coordination on the part of the management plays a very important role in terms of getting into the effectiveness, in terms of getting into the efficiency which is required to be achieved. Okay. Now, talking about this audit reporting, once the audit areas are completed, conclusions are drawn, what will happen? They will get on to their reporting requirements as well. They will have their conclusions, okay, the way they want to put it across, right? Next, talking about this next auditing standard, which talks about service organization. So one of the audit considerations you'll have for an entity which is using service organization. Now, in this case, I think first of all, it becomes important to understand a service organization. Okay, this entire structure, I think we need to understand that. Why? Because once we have the clarity as to what's the context, what is really required to be done, after that it becomes quite easy. Okay. So now let me just take you back to the working file. Therein we'll try to get into the understanding around. Okay, so what is the situation we are talking? Let's understand. Say ABC Limited is the reporting entity. Yeah. So by reporting entity, we mean to say this is the entity for which audit is required to be performed. Yeah. And this entity has an auditor. PQR and company is the auditor. Right? So it's the auditor. Now, how will an auditor audit the entity? Audit the financial statements by looking into their various processes, various details, information. Yes or no? All of these things will be looked at. So that's how the audit will be performed. Now, say a process of this entity ABC is outsourced. So what this entity has done is payroll is outsourced by the entity. Say it's outsourced to another entity. To whom it's outsourced? Let's suppose the entity to whom it's outsourced is, say, RLL Limited. So that's the company to whom this is outsourced. Yeah. Now let's go back to the audit of ABC Limited. Now we are looking at ABC. And for the auditor of ABC, understanding of the process, risk assessment, identification of the risk, understanding of the controls in relation to those risks. Is that required? Answer is yes. That's something which is required on the part of the auditor. Okay, so the auditor will get into such type of assessment. Is it required for all the processes? Yes, of course. Maybe a detailed understanding or maybe a detailed evaluation is for the important one, significant one. For the others, which are, say, not so significant, It's the auditor who will check that, assess that. Now, payroll being one process, which is important for the organization generally. Now, what do you find? Output of this process, which is used by the entity. Let's suppose there are various reports in relation to employees, basis which financial statements are prepared by ABC. It's looked at by whom? It's RLL. Yes or no? Now, for the auditor in such a situation, what is going to be the important part? It will be important to get the comfort around this process, right? But how do you reach that? How do you get into that stage? That's the question mark. How do you reach that stage? Now, for the auditor to get into such a stage will require maybe different approaches. Maybe the auditor can go to this entity, RLL, understand their process, understand their controls in relation to the payroll. So, of course, idea is not to audit RLL, but that is not the subject matter anyways. Idea is to audit payroll, which is with RLL. Okay, so that limited part is required, but that's nowhere available with ABC. That's available with RLL. So how do you go about it? Either you go and audit there, along with something that you do for ABC, you do that for RLL in a limited manner, limited to, of course, the process which is involved. Or otherwise, what can also happen is maybe if RLL can provide a report in relation to this, which PUR is looking at. Yeah. So this RLL is what? It's the service organization. So that's why if let's suppose you have the auditor of RLL, let's suppose it's MNO and company. So they are the auditor of RLL. So you can say that's the auditor of service entity. So the term you can use for that is service audit. Okay, term that you use for ABC is user entity. And the term that you use for auditor of user entity is user auditor. So these are the terms you can say which are used, right? Now for our purposes, what do we need? We need to understand as to how do you really go about. Now, who will decide this approach? Will it be decided by ABC, RLL, MNO? No. It's something which the auditor has to decide. So auditor will have to take a call as to how would the auditor want to go about it in terms of feasibility, in terms of the efforts involved, in terms of access which is available. Okay. And that's where we have these couple of reports sort of which are being used. And so let's look at those reports. Type 1 and type 2. Now these are the nomenclatures that you use. Right? Now for this type 1 report, what are the elements? So this report will have the description, prepared by the management of whom? Service organization. Of the service organization's system, in our case, LL system, its control objectives, and the related controls that have been designed and implemented as at a specified date. Because that's what the main auditor, user auditor, is trying to look at. Who will provide this? Service auditor, of course, because it's a report, so it has to come from the auditor. The user auditor cannot provide. User auditor will need this. Who will provide? Service auditor will. Right? On the top of this description, what will this report contain? A report by the service auditor with the objective of conveying reasonable assurance. That includes service auditor's opinion on the description. So this description that you receive, okay, so service auditor's opinion on the description of the service organization system, control objectives, related controls, and suitability of design of the controls to achieve the specified control objectives. Right? Now, let's talk about this type 2. And we'll also then try to understand what's the difference between these two. And what is something you'll generally see being asked by the user auditor. Now, when you talk about this type 2 report, so it's a report that comprises a description, again, prepared by the management of service organization of the service organization's system, control objectives, related controls, their design and implementation as at a specified date, or now this is additional. What do you see in case of type 1? Throughout a specified period. And in some cases, their operating effectiveness throughout a specified period. Now that's why this is considered to be something which is going to be helpful, relevant. Okay. Now what is it that the service auditor will provide here? A report by the service auditor with the objective of conveying reasonable assurance. About what? Service auditor's opinion on the description of service organization system, control objectives, related controls, suitability of designs and controls to achieve the specified control objectives, and operating effectiveness of the controls, and on the top of it, a description of service auditors' tests of controls. Means what are the tests which the service auditor has performed and what are the results. So I think we can clearly see there is a difference between type 1, type 2. That's why we have type 1, type 2. Yes or no? But type 2 is something which is covering some more aspects. Something which is more relevant, more useful. So that's why that's the thing you will generally find the user auditors asking for. Okay. Yeah. Now, obtaining an understanding of the services, controls around it, and you can say this complete assessment is required by whom? User auditor. Yeah. Now let's suppose once the type 1, type 2 report, whatever is required, is taken by the user auditor. Now, what is going to be the next step? contacting the service organization through the user entity to obtain specific information if the user auditor believes there is something which is required as a top up to what is already obtained. Yeah. So that means just by obtaining type 1, type 2, the entity cannot say I'm through as far as that process is concerned. See, for the audit scope and therefore the audit approach and the extent of the procedures which the auditor will plan, that will always lie with the auditor. So that's something which the auditor will decide. So of course, auditor has chosen an approach wherein he wants to go with this report received by the service auditor, which he'll want to maybe sort of review, look at, and the objective is what? Use that. But if the user auditor believes there is something over and above that he will need, can the user auditor do that? Yes. But there's again, of course, going to be a protocol. So all of these is really relevant to user entity. So it's all in the context of the user entity. So that's why you see this routed through user entity always. Yeah. Visiting the service organization and performing procedures that will provide the necessary information about the relevant controls and the service organization. Now, can this requirement be placed by the user auditor? Answer is yes. Answer is yes. That will again be dependent on the process, some of the activities, and the risks which are involved there, which may not have been covered by, say, type 1, type 2, which the user auditor wants to go and evaluate on his own. So can this be done by the user auditor? Answer is yes. This can always be done. Yeah. So this can very much a part of the strategy on the part of the user auditor. At times, we may also have this situation. What is the situation? Using another auditor to perform procedures that will provide the necessary information about the relevant controls at the service organization. Maybe user auditor wants to bring in another auditor. So we are not talking about service auditor. Okay. Let's suppose wants to engage somebody else. He can't visit himself directly. So that's why engaging somebody else. So you can say effectively, it's a situation wherein you have this sort of thing called as a kind of expert of the auditor. Yes or no? Because in a way, that other firm is what? That is nothing but an expert who is going to help the user audit. Yes or no? Yeah. All right. So now, moving further. So now, before we move on to the questions, okay, so let's move on to this next topic. And we can say very important area. So let's discuss this and then we'll move on to the questions, right? Communication with TCWG. Now the question arises, what is TCWG? So of course, we know the full form. Those charged with governance means those who are going to look at the governance. It has to be what? Board of directors, audit committee. So that's what you call as TCWG in relation to an organization. Now, TCWG and the auditor. See, actually, if you talk about the audit, basically audit is what? Audit is a joint responsibility, sort of. Why? Because when you talk about controls in an organization, financial reporting requirements, okay, ensuring that the financial statements are in place in a true and fair manner, something which is required to be looked at by the auditor. And because at the first level, it's the management who's preparing that, and of course, it's something which is controlled by the TCWG. So that's why you can say this objective is what? This objective is something for which two parties are involved, TCWG and auditor. Correct. So that's why it becomes extremely important for them to have a clear set of communication channel. That's a very, very important requirement. Communication channel. Because TCWG needs to set out the expectations they will have from the audit. So see, audit, you may say that it's quite standardized. Yes or no? Because as far as the scope is concerned, the auditor will go and audit the financial statements, no doubt. Yeah. But in such a situation, can we say that this entire approach, the risk assessment, areas of focus, it's all going to be standardized, it's all going to be a sort of checklist? Answer is no. Yeah. There are a lot of factors which will have an impact on the audit approach. That's where this joint discussion between the TCWG and the auditor becomes extremely important. Why? Because actually, who is engaging the auditor? It's TCWG. Okay. So they are required to ensure that something which the auditor is doing is in line with what is actually required to be done. Yes or no? Because otherwise, what will happen? Otherwise, you don't know about it. As to what is happening is in line with what is really required to be done. Yeah. So that's a very, very important consideration on the part of the auditor as well as TCWG. Now that's where this standard comes into the picture. So the standard talks about such a communication channel which needs to be in place, which needs to be set up. Yeah. Basis which, what will happen? Basis which the effectiveness of audit can be increased. Because what is the end objective? An effective audit. Yes or no? That's what the auditor will want, and that's what the TCWG will want to be in place. Yeah, so when you talk about this communication channel, therefore, so what are going to be the responsibilities? It is extremely important for the auditor to set up a clear communication channel with the TCWG. Now let's think about it practically. So what will happen? Say audit of financial statements for 25-26 is being performed. Say this is required to be completed by 31st of May. Okay. So what will happen? Let's suppose this is the date board meeting has to happen. This is the date when audit committee meeting has to happen. Auditor will complete the work. All this while auditor will be communicating. Okay. With whom? Management. You can say management, or maybe the process teams who are involved, maybe the finance team. So no, so that's where the communication channel is sort of carried out in a regular manner on a day-to-day basis. Once the auditor is through in terms of the report, what will happen? That's where you have this, say, audit committee meeting. Now, this will last what, maybe for 1 hour, 2 hours. That's the duration. And within this duration, what will happen? There will be a slot, say for 15 minutes, say for 5 minutes. Or what? This two-way communication between audit committee and the auditor. Now that is where the question arises. That for audit of the financial statements, which is a complicated exercise, which is a time-consuming exercise, wherein the auditor would have done a risk assessment. Auditor would have looked at certain areas which would have been a challenge during the course of audit. Auditor will have some critical areas which he would have audited. He may have some areas, some observations, even though those are not material misstatement, to be reported as material misstatement. Okay, and this entire process which the auditor would have followed. So how is that discussed within this time slot? So is it really practically possible? Or if done, so will that be an effective communication between the two parties? Answer is no. Yeah. So that's where this standard requires this communication to be an effective communication. Yeah. So that this discussion can be meaningful. This can be useful for the purposes of audit. Otherwise, what will happen? Otherwise, it will be more of a technical requirement, which will not really serve much of the purpose. Yeah. So that's why some of the steps you'll have in such a situation. Determine the appropriate person. So of course, if let's suppose audit committee comprises of 4 persons, 5 persons, 3 persons. So each and everyone may not be involved in these discussions. So who is going to be involved in the detailed discussions? What is the level of communication they will have? What is the channel they will establish? How frequently they meet? And what are the areas that they go discuss? All of these aspects need to be considered. Why? Because that will have a huge impact, that will have a huge bearing on the quality of the audit. Yes or no? Plus, this communication is also required to be done in a timely manner. Now, what if this is done when you are meeting at the fag end? So, will that really be effective? Answer may not be. Answer may be no. May not really be effective. So that's why it's an important consideration to check whether it's really effective or not. Yeah, so that is also required to be looked at as to whether this is really effective or not. Because if that is not effective, that can again have a huge impact. Correct? Now, as we talked about, who are those charged with governance? Those are responsible for overseeing the strategic directions, who have the obligations relating to accountability of the entity, who are responsible of overseeing the financial reporting process. So you can say it's the board, it's the audit committee. Yeah. And again, depending on the structure of the organization, you'll have this TCWG. But when you talk about a company, so that's where you are talking about the board, or you can say the audit committee. Now comes another very important area, that what are the matters which are required to be communicated, which are required to be discussed. Why? Because if, let's suppose, the matter is all about conclusions, so the timing will have to be decided accordingly. If the matters require something around the planning, then it's appropriate to discuss that once the planning is done. Yes or no? Because if you are discussing something at the time of conclusion about the planning, how does it really serve the purpose? Yes or no? Yeah. So now, for an auditor, the communication is required in respect of certain areas. So it's not about each and every area. Why? Because as far as the entity is concerned, you can say there are two parties the auditor is going to deal with. One is something that you call as management, say the CFO, finance team with which the auditor has been communicating, coordinating on a day-to-day basis, discussing various issues, planning, approach, all of those things, which doesn't change. Okay. And that's where there's no specific listing of the matters. Why? Because it could be related to anything. But on the top of it, something which is done with the management and which has to be done with the management at the first place. This is again very important. When you talk about communication with the TCWG, that doesn't mean it has to be a confidential one. It has to be the one with the TCWG only, which will not be done with the management. No, that's not the objective. Of course, at the first level, understanding, clarity, communication has to be with the management. Yeah, because when the auditor meets the TCWG, they have clear understanding of those matters which are going to be discussed. Why? Because maybe there are some insights which the management may have to provide, which the auditor may be missing. So once you have the clarity from the management and then you talk to the TCWG, the discussion becomes effective. Yeah. Otherwise, it's all about filling the gaps, which will effectively a wastage of time. Now the next is TCWG. So when you talk about management, the next is TCWG. And with TCWG, now the expectation is not that you go and meet them or you make them sit with you for the purposes of audit, the way you'll do with the accounts team, with the management, the finance team. No. And that's where some of these areas are required to be considered, which are going to be the matter of discussion between the auditor and the TCWG. So what are those? Planned scope, timing of the audit. What are the significant risk areas? Now, when you talk about significant risk areas, even though it's going to be entity specific, it will be on the basis of the judgment of the auditor. Yes or no? Yeah. So that's why it's important for TCWG to understand that is there any area which should have been considered as significant risk by the auditor may not have been done? Or what are those areas which are a significant risk for this particular organization? Yeah. So it's not only about understanding from the auditor. See, this communication has to be a two-way communication. So that if there are any gaps on the part of the auditor, those gaps can be filled. Of course, the management has done that. But what if the TCWG also wants to add to those insights which are already provided? So how do you achieve that? How do you really go about it? Through this communication. Yes or no? So that's where this discussion around the planning part, you can say. Okay. So you can say around the planning part becomes important. And as we discussed, timing plays a very important role here. So now, if let's suppose there are a few areas around the planning which are required to be communicated, so when should that be discussed? Because is it only a communication? Is it only an FII which the auditor needs to sort of go and tell the TCWG? No. The purpose is what? Purpose is a constructive discussion. For achieving what? For achieving effective audit. Yes or no? Similarly, as around the independence. Now, when do you do that? Before you actually start the audit. And this is crucial element. You can say something which is fundamental. Yeah. Which the TCWG needs to be aware of. Yes or no? Then significant findings. Say there are matters related to CAM, which are going to be reported, of course. If let's suppose there are some modifications, whether it's a qualification, adverse opinion. Yeah. If let's suppose there are some material weaknesses, significant deficiencies in the FC. Just a while back, we discussed about fraud. Now, in terms of significant risk, it would have been considered. But what if there are some identified or suspected fraud? So the auditor would have looked into it, but the auditor needs to communicate the TCWG about. Just a while back, we talked about non-compliance with laws and regulations, which the auditor needs to evaluate. What if there is a non-compliance? That's again a significant matter for the TCWG to understand. Okay. So during the course of audit, if let's suppose there are some significant difficulties, it may be related to any matter. Say there are some disagreements with the management. Now, all of these communications, where do the auditor go? Where are these supposed to be done? TCWG again, right? And similarly, when you talk about emphasis of matter, okay, so now when you talk about modifications, emphasis of matter, some of these areas are important for the understanding of the TCWG. So that's why these are required to be reported. Now, some of the examples you may have. Now, accounting estimates is an important area. How the management identifies the estimates, revisions to the estimates, significant assumptions which may have been used, if there are any indicators of management bias, adequacy of disclosure requirements. Okay. Now, when you talk about disclosure requirements, issues involved, related judgments, again, a very important thing. Accounting policy. What if there were some options available and an accounting policy has been selected? So, what's the basis? If at all a new policy has been considered. Okay. Say there's a potential impact of significant risk. There are some unusual transactions. Okay. So all of these are what? All of these are important matters for TCWG to understand. Right. Now, any communication the auditor makes with the TCWG, you can say, how does it really flow? So auditor and the TCWG, before they meet, so what will happen? Auditor and the management, they will keep discussing each and everything. Yeah. And once this process is through, that's when the auditor reaches out to TCWG. So over here, the auditor is selective in terms of the communication, in terms of the discussions. Over here, you can say all the matters are discussed. So let's also try to understand the difference as to what is it you may have. So matters arising during the course of audit, including the matters communicated with TCWG. So that's what you discuss with the management as an auditor. It's a review of financial data used in valuation, understanding how going concern assessment was performed, key assumptions, estimates, understanding processes, questions related to design of risk control metrics, management's assessment of IFC. But when it comes to TCWG, now the auditor will be selective. So significant and relevant matters for overseeing the financial reporting process. It's not about each and everything. Yeah. So when you talk about valuation, findings on the valuation report, its impact on financial statements and the audit report. When you talk about going concern, for example, basis of conclusion, reporting implications. If you talk about internal control, significant deficiencies and the material weaknesses. So you're not getting to the complete process. Yeah. So that's where you become selective. Right. Now, we can do a sort of knowledge check and some of these activities, and we'll move on to some of the questions as well. Yeah. So I think what we can do now is we can take a break, and after the break, we'll pick up the questions. Right. So we'll start with the set of questions right away. So Ashok, we can take a break now. Now, are these matters required to be communicated with TCWG? Let's try to look at unavailability of company's personnel during the period of audit. Basis of auditor's preliminary judgment about materiality in terms of the determination of materiality. So that's the aspect auditor will consider, right? Unexpected extensive effort spent by the auditor to obtain audit evidence. Let's suppose there are some challenges in getting the data, in getting the information, right? Which is very commonly seen across the audits. Level of responsibility assumed by the management for preparation of financial statements. Non-cooperation by the management during the audit. So they are not supportive in terms of sharing the information, right? Or maybe timely providing the information. Justification for auditor's selection of sampling methods. Yeah. So in this case, what do you think? What are going to be the matters? Right. So that's what we can look at. So of course, when you talk about materiality assessment, any challenging matters, will those be communicated? Yes. Now, in respect of any significant judgment which the auditor has applied in relation to the significant risk areas. So will you consider that? Yes, of course. Now, you have been appointed as auditor of ABC Real Estate Private Limited, because that's the company, and noted the following matter. With respect to the construction and operation of Aradhya Homes project. So let's suppose there's a project. There were certain disputes between the company and the customer in relation to the delays in construction and various technical issues. Based on the legal proceedings, court passed an unfavorable order amounting to 50 million INR payable by the company to the customer. So you can say it's a kind of a litigation. It's a kind of liability which could have been there. The matter has been discussed with the management. Company has a board of directors comprising of 3 members and the management group comprising of 5 members. So if you look at the materiality from the auditor's side, so it's 45 million. Okay. Now, in this case, the question arises, are there any requirements to communicate the matters with TCWG in this company? Management has already communicated the matter to TCWG. Does the auditor need to communicate the same separately to TCWG? Answer is yes, of course. So when you talk about this matter, so this is of course crossing the materiality threshold. So will you say it's a significant matter which requires the attention, knowledge, discussion with the TCWG? Answer is yes. Okay. So of course that is something which is really required to be in place. Right? Now, communication regarding the auditor's independence is made during when? Acceptance of the engagement or concluding discussions? Of course, acceptance. Significant findings in an audit are communicated through presentations followed by discussions and minutes or oral discussions. Yeah, so that's something we need to assess. Is it mandatory for the auditor to design specific procedures to support evaluation of two-way communication? Yeah, of course. So some of those considerations auditor will have to look into. Yeah. Now, moving further. Okay, so what I'll do is I'll just pick up some more questions. So let me just get to the. Okay, so before we really get on to some more questions, Yeah, so what I'll do is, so just to give you some insights, okay, now as around this TCWG piece, because we are on to this part right now. So you can also go through this sort of checklist. Okay, now practically, if let's suppose you were to evaluate, you were to assess, you were to ensure, and you were to document as well the requirements of this auditing standard. Okay, so how do you really go about it? So what an auditor will do is, auditor will generally have some sort of, can say, templates, documentation criteria, say in the form of checklists at times. Yeah. So that's how you can say a checklist can be maintained. Wherein what do? They will specify each and every requirement. Okay. Then they will, sort of put down, means they will document as to whether it's been completed or not. Name and position of the person communicated, date, place of communication. Okay. Whether it was a written communication or oral or both. And what was the response received from TCWG? If there is any sort of evidence which is available. Yeah. Because let's try to also understand that the requirement of this auditing standard to be followed by the auditor. So that is what? That's again a kind of audit procedure, you can say. Yes or no? So let's suppose during the audit process, if you have a specific requirement like this, so that is of course to achieve the quality, right? But that is also a mandate and something which forms part of audit process. So is that required to be documented? Answer is yes. So how do you really document that? So that can also be a matter of consideration for the auditor. Yeah. Because if you don't document that appropriately, if you don't put it down the way it's required to be done, then it can again have a huge impact. Yeah. So that's why it's an important consideration on the part of the auditors. That's how you can say each and everything will be specified. So first of all, talking about the independence, which the auditor would have evaluated. So the way the communication will be done, then the planned scope and timing of audit, overview of planned scope, planned use of the work of internal audit function, if at all it's in place, right? If let's suppose it's a group audit, what are the additional considerations? Significant findings which might be there. Yeah. What are the significant findings? Identified or suspected fraud, other matters related to fraud, matters involving non-compliance with laws and regulations. If there are some significant deficiencies and material weaknesses in the internal control. Okay. Uncorrected misstatements. Now this is again an important document. So during the course of audit, once the financial statements are prepared and given to the auditor, we may see some adjustments are passed by the management, of course. But that will take place during the course of audit. So why is that happening? Because the auditor requires that, or maybe the management came across some errors and they are rectifying that. Okay. And some of the errors management may not want to rectify. Now it's important for TCWG to be communicated about uncorrected misstatements as well as corrected misstatements. Why? Because even if those misstatements are corrected, those misstatements were there in the first place. So if you look at it from the management's perspective, if you look at it from the company's process, there were some problems which led to those misstatements and which have been detected and improved upon by the company, no doubt. But what is the reason behind that? So that's something which the company needs to evaluate also. So when do they do that? When they are aware of that, when they get to know about it, and that's where this communication again is important. Okay, so whether you talk about uncorrected misstatements or you talk about corrected misstatements, right? Significant matters which might be arising during the course of audit. Yeah, so there can be various items. If there are some other matters, so when a material information of other information exists, say management's refusal to make the correction. Yeah. Facts became known after the date of auditor's report and after the date the financial statements are issued. If let's suppose that is somewhere required to be discussed. That's again a matter of our discussion that will pick up maybe slightly later. Yeah, so you can say this is again a sort of checklist one may consider, one may look into as far as the audit requirements are concerned. Okay, yeah. And this can be the document, therefore, for the purposes of putting down as you can say a working paper, right? Something which you call as a part of the audit file, right? Which is a part of the working paper. Okay. So now what I'll do is I'll just move on to the questions. Huh? So just give me a minute. Okay, so can pick up some questions now. Right, so there we go. Yeah, so let's look at this. By Decor Limited, presently engaged in manufacturing of fabrics, wants to set up a new plant, okay, for manufacturing of special kind of fabric, providing an altogether different texture and feel. This kind of fabric has become a hit with the retail customers. So basically, we are talking about a company which is into manufacturing of fabrics. Company needs to set up plant for manufacturing the above kind of fabric, involving huge capital outlays to stay competitive. So they are planning to come up with a new manufacturing facility. Yeah. You are the auditor of the company and find that company's revenue has increased in the financial year 2023-24 to 1000 crore from 750 crore in the last year. Okay. So that's the change you get to see. So it's a significant jump, right? By the time you started the audit, there was no change in plant capacity, and the information regarding need to set up new plant has become known to you during the inquiry of company personnel. So that means as a part of your audit discussions, audit procedures, this information came to your knowledge. Yeah. Now, given the situation, discuss how you should proceed to deal with the above situation. Now, when you got to know, when you get to know about the situation, okay. Now it's a situation become known to you during the inquiry. But now you have some information available which you didn't know earlier. So the question arises, how should you proceed to deal with our situation? Paying special attention to the risk of material misstatement due to fraudulent financial reporting. Okay, so that's the fraud risk you need to consider, and accordingly you need to evaluate. So basically it's all about how do you respond to this, right? What is going to be the response to this risk? Yeah, so let's look at this. The given situation highlights need for the company to set up new plant for manufacturing of special kind of fabric to stay competitive in the market. Setting up of such plant involves huge capital outlays which could entail financing arrangements. Therefore, excessive pressure exists for the management to be involved in fraudulent financial reporting. So it's all about the evaluation. So first of all, as an auditor, what do? You evaluate whether such a risk will exist or not. Yeah. So as an auditor, you can see that this risk exists, right? Now, in such a situation, management may be tempted to inflate its revenues. No doubt. It's a fraud risk factor and needs to be evaluated by the auditor. Yeah. So this will require evaluation. Now, revenues of the company have jumped from 750 to 1000, and therein company is still planning to set up a plant. So as far as the capacity is concerned, the capacity remains same, but the company is able to churn, okay, bring in so much efficiency. So that seems to be very, very difficult. So that's a question mark. Auditor may consider above said fraud risk factor for assessing the material misstatement due to fraud. In case of auditor addressing risk of material misstatement due to fraudulent financial reporting, audit procedures to address such risks like performing substantive analytical procedures relating to revenue, use of computer assisted audit techniques to identify what? Unusual revenue transactions, testing controls pertaining to revenue transactions. Yeah. So all of these you can say are the procedures you will think of. Okay. So these are the procedures you will think of as an auditor. Right? Next. So let's look at this. CA Ridhima, internal auditor of Track Store Limited. So that's the company. So internal auditor has pointed out following deficiencies in the internal control of the company. First, receivables are not reconciled at stipulated intervals. Okay. Second, customers are provided a credit limit based upon their track record. Yeah. However, no review of customer credit limits is undertaken at required intervals. Now, we are talking about the deficiencies here. These are the deficiencies. Who has pointed out? Internal. So there's a report of internal audit perspective. These deficiencies. Statutory auditor of the company finds that no action has been taken by the company on the said deficiencies pointed out in reports of internal audit. Okay. No action has been taken by the company. Ideally, what should the company do? See, whenever you have this internal audit, and in fact, internal audit is something we have had a discussion on, there will always be a management action plan. Why? Because idea is not to get onto the observation. Idea is to improve upon. So that's why there will always be a management action plan. And the plan will then be executed, means any remedial action is required to be implemented so that course correction can be done. And then the follow-up is done. Check whether it's been implemented. But over here it appears no action has been taken by the company on the said deficiencies, which is a matter of serious concern. So knowingly there are deficiencies. If the management is not doing anything about it, it's a bigger concern. See, to have the deficiency is a concern, right? But if you address that, then of course it reflects on the part of the management in terms of the approach. They will have the governance mechanism, the control systems they want to improve. And so it all talks about the corporate governance in a way. Now, which seems to be a question mark in this situation. Now, what does above situation indicate to statutory auditor? Now, what is the indication? I think indication we have already discussed, but let's look at this indication now. Management failing to remedy known significant deficiencies in the internal control on a timely basis could be a fraud risk factor for misstatements arising from fraudulent financial reporting. Undoubtedly, when the management doesn't correct significant deficiencies in the internal control on a timely basis, it reflects what? An attitude, character, or a set of ethical values that allow them knowingly and intentionally. Now, this is a bigger concern. Knowingly and intentionally to commit a dishonest act. Yes or no? Failure to rectify known control deficiencies pertaining to reconciliation of receivables, which is there. Review of customer credit limits has the potential to fraud. Lack of timely reconciliation of receivables may lead to intentional misstatements. Yes or no? Yeah. Further, Non-reviewing customer limit may lead to grant of credit beyond the credit worthiness, which could be a big concern. It may result in intentional typing up of companies' funds with risky customers due to collusion. So collusion is a possibility. So therefore, we can say above situation is a fraud risk factor for financial reporting, right? Okay. Now let's look at the next one. Faz Insurance Brokers Limited is a leading online insurance intermediary. Now the nature of industry doesn't matter. So that's something you'll have to consider, that it's all going to be the matter in. During the year, Director General of GST Intelligence has issued a notice to the company for allegedly creating fictitious invoices for marketing and sales services amounting to rupees 50 crore in favor of non-life insurance companies. Okay, so that's a concern. Premises of company were also searched during the year by DGGI officials. Matter was also informed to IRDAI. So IRDAI, you can say, is a regulatory body, by DGGI for violation of norms and regulations. See, for insurance companies, there's a regulator, IRDAI. So as far as the company is concerned, say it's a matter of concern. Okay, it's important for the company to look into. It could have a serious implications as far as its operations are concerned, because some of these regulated companies, you can say in a way they have a license to run. Yes or no? So it's not something you just go and get into a business. You need a license to operate. And if you are involved in matters which the regulator is concerned about, then there can always be a question about whether you are really whether they really let you continue or not. Okay. Now, does the above situation has any bearing on your responsibilities as statutory auditor? Undoubtedly, yes. Outline briefly in the context of possible non-compliance with bylaws. Now, over here, if you look at it, yeah, so we are looking at possible non-compliance with the laws. Yeah. When the auditor becomes aware of the existence of or has information about investigations by the government departments and the regulatory organizations, it may be an indication of non-compliance with laws and regulations. Okay, which clearly seems to be happening in the given situation. So no, yeah. In the instant case, so if you go back, look at the fact pattern, notice has been served upon the company by DGGI. Yeah, for, you can say, illegitimate activities, for allegedly creating fictitious invoices in the guise of providing marketing and sales services for 50 crore. So of course the amount doesn't matter because it all reflects on the integrity of the management. Issuing an invoice without the supply of services is a serious offense. Yeah. So we are talking about a serious offense under the GST laws. And it could involve penalties and imprisonment. Okay. Such suspected non-compliance may have a direct effect on the financial statements. Yeah. The matter has also been informed to regulator, that is AAI. Violation of AAI regulations may result in fines, litigations, other consequences for the entity that may have a material effect on the financial statements. Yes or no? Yeah. So we are talking about violations of AAI regulations, which again is a serious offense. Yeah. So these are all interlinked. Yes or no? Now, if you look at it from the auditor's perspective, now, if the auditor becomes aware of information concerning an instance of non-compliance, or say suspected non-compliance, yeah, let's suppose it's only suspected. Does it really matter? Yes, that will also matter. In such a case, the auditor shall obtain an understanding of the nature of the act and the circumstances in which it has occurred. Of course, the auditor will want to know about the matter. Yeah. And further information to evaluate the possible effect on the financial statements. Yeah. If the auditor suspects there may be non-compliance, auditor shall discuss the matter with management and where appropriate TCWG. If the management or TCWG, wherever it's applicable, do not provide sufficient information that supports the entity as regards its compliance, and the auditor has a judgment. What is that? Effect of suspected non-compliance may be material. Auditor shall consider the need to obtain a legal advice. If the sufficient information about the suspected non-compliance cannot be obtained, so you can always say it's about lack of information. Means what if you are not getting the information? Yes or no? If you do not get the required level of information, which is important for you to complete that, what do you do? How do you go about it? Yeah, so that's again a matter of reporting implications, which the auditor then needs to think about, evaluate, whether the auditor will want to get into any sort of reporting implication in such a case. Yeah. All right. So now moving further. C. Vallabh Sundar is auditor of a leading private sector bank. Okay, so now we are talking about a bank. So that's the organization. IT systems and controls is under his consideration. See, for a bank, if you talk about systems, controls, of course, you will say that in today's times, it has to be all about technology driven. Yes or no? It has to be all tech driven. Yeah, so that has to be the thought process, that has to be the consideration. Now, considering the importance and considering the matter as around the IT systems and the controls, which the auditor believes needs to be reported as CAM. Why? Because the nature of operations of the entity are such. Yes or no? You will find high level of automation, complexity of IT infrastructure. Its impact on the financial reporting system is huge. Why? Because that's how it's running. That's the only thing, right? Now, in this case, this being a matter of CAM, now the question rises: at what time auditor needs to communicate about such CAM? Okay, because if the auditor has thought through, auditor is uh, looking at it as a CAM to be reported. Okay. So how do you really go about it in terms of its reporting? So that's one. What are the relevant considerations in this regard and their usefulness? Okay, so means complete insights you need to share as to how do you really go about it in such a case. So let's look at this. Now over here, basically we are talking about communication with TC. Yes or no? That's a matter of discussion. No doubt with TC. And such a communication has some criterias, parameters. Okay. Only then will say such a communication or a discussion is meaningful. Otherwise, not. Otherwise, it's more of a compliance. You can say it's just a tick in the box, which doesn't really help and which is not really the intent of the standard as well. Yes or no? Now, SA 701. Basically, it's about CAM, so we'll have to get into this SA 701 as well, which talks about this CAM. Okay. So it talks about appropriate timing for communications about CAM. However, the auditor may communicate preliminary views about the CAM when discussing the planned scope, timing of the audit. May further discuss such matters when communicating about audit findings. Correct? Doing so may help to alleviate the practical challenges of attempting to have a robust two-way dialogue about what? About CAM. At the time financial statements are being finalized for issuance. Okay. Communication with the TCWG enables them to be made aware of the key audit matters that the auditor intends to communicate in the auditor's report and provides them with an opportunity to obtain further clarification when where necessary. Auditor may consider it useful to provide TCWG with a draft of auditor's report to facilitate this discussion. Yeah. Communication with TCWG recognizes their important role in overseeing the financial reporting process, provides the opportunity for TCWG to understand the basis for auditors' decisions in relation to CAM, how these matters will be described in the auditor's report. It also enables those charged with governance, TCWG, to consider whether new or enhanced disclosures may be useful. Why? Because that's something which the auditor is going to report upon in the auditor's report. So that's why. Is there anything which they want to maybe put down? Yeah. So that's a matter for the consideration of TCWG. Okay. Now, let's look at the next one. For audit firms, which are those? GPR and Company, MKS and Company, CY and Associates, DS and Associates. They have been appointed for conducting the statutory audit of KNB Bank. It's a public sector bank in accordance with regulatory guidelines. So what does it mean? Joint audit. The moment we say we have more than one, we are talking about joint audit. Yes or no? Professional work was divided by audit firms on the basis of zones. So they are saying maybe north zone, south zone. So that's how they have done. However, work relating to IT systems and the controls was not allocated by them due to its very nature. Okay. While planning for the above common work area, it was decided to test IT general controls, application controls, and IT dependent manual controls. Planned key audit procedures relating to this common area also included testing, design, and operating effectiveness of controls over computer operations, including backup, batch processing, and data center security. Now, actual audit procedures pertaining to testing controls over batch processing were performed by the team of DS and Associates. That means one of the audit firm performed. In case work in relation to above audit procedures is not performed professionally by DS and Associates, discuss where the responsibility for such lapses would lie in accordance with SA 299. Yeah, so that consideration of SA 299 we need to have, and accordingly we need to answer this, right? Now, in respect of common areas, joint auditors are only responsible for appropriateness of nature, timing, extent of planned audit procedures agreed amongst them. Responsibility of individual execution lies with the concerned joint auditor. Undoubtedly. Yes or no? In the instant case, audit procedures relating to testing, design, and operating effectiveness of controls over the computer operations, including the backup, batch processing, data center security, have been planned jointly. Now, this was planned jointly. Why? Because it's a common area. However, when it comes to audit procedures, okay, in relation to testing the controls over batch processing, these were actually performed by the team of DES and Associates, although these were planned jointly. Yeah. In case of any lapses in performing such procedures, therefore, what will happen? DS and Associates would be responsible, right? Okay, yeah. Now, let's move it. It's so I'll continue with the questions. Yeah, but just look at maybe another set of questions. Huh? So I'll just open another document. Yeah, so let's look at this. A, B, and C are the joint auditors of a company. Yeah. B is of the opinion that there are material misstatements in the financial statements of a company, which, if accounted for, would turn the profit reflected in the financial statements for 25 crore to a loss of 5 crore. So if you look at the misstatement, okay, now will that be considered to be material? Undoubtedly. He therefore wants an adverse opinion. However, if we talk about A and B, they do not concur with this view. Okay, so B has a different thought process. A and C have a different thought process. Now, in this case, the question arises, is B required to go by the majority opinion? Why? Because out of three, if let's suppose two are saying something, so whether the third one needs to follow the other two. So let's understand this. See, where the joint auditors, they have a disagreement. Now, is that a possibility? Always. See, when two persons are involved, so it's not necessary that they will have the same conclusion. Their judgment could be different. So that possibility remains. Now, in such a case, what will happen? They shall express their opinion in a separate audit report. So that's something they will be required. A joint auditor is not bound by the views of majority. Okay. And shall express opinion formed by such auditor in a separate audit report. Right? In such circumstances, audit report issued by joint auditors, what will happen? That shall make a reference to the separate audit report, which is issued by this third joint auditor, say B. Further, such separate audit report shall be giving a reference to the audit report issued by other joint auditors. So it's all about, in their audit reports, they will give the reference of the other auditor. Yeah, so that when a stakeholder is reading a particular report, they can always have a perspective about what the other auditor is saying. If let's suppose they have a different view. Yeah. Because it may happen that two reports, maybe a stakeholder is only looking at one, he doesn't know he needs to look at the other one. Because for the stakeholder, it's important to know, but he will not know that he needs to read both. That both the reports may have a different answer. He may be knowing about it technically, so that's why once you put the reference, that's where you are trying to tell him that there is another report, so that it doesn't get missed out. Yeah, that's why it's important. Such a reference shall be made under the heading other matter paragraph. So there's a separate section for this. Okay. Next. C.A. Shelley Goyal is offered appointment as auditor of Root Limited. It's a listed company. Yeah, it's a listed company. Audit committee of the company wants her to justify independence in relation to the company through proper communication. Of course, that's a mandate, actually, that's a requirement. Although she has ensured there are no threats to her independence, she feels requirement of audit committee asking for this is beyond the purview of audit committee. Yeah, so of course it's not about whether there's an independence issue or not. It's all about understanding what the audit committee needs to have, okay, and what the auditor needs to provide to the audit committee. Now, as required in SA 260 in case of listed entities, auditor shall have a communication with TCWG. Now, what is that communication? Let's look at these requirements. A statement that the engagement team and others in the firm as appropriate. Firm itself, network firms, wherever they are applicable, they have complied with relevant ethical requirements. Okay. And of course, the fundamental principle is what? Independence. All relationships and other matters between the firm, network firms, entity may reasonably be thought to bear on independence. This shall include total fee charged during the period covered by the financial statements for audit, non-audit services provided by the firm, network firms to the entity, components controlled by the entity. All of those things get covered. These fees shall be allocated to categories that are appropriate to assist those with who are charged with governance in assessing the effect of services on the independence of the auditor. Yeah, and related safeguards that have been applied to eliminate identified threats to independence. Okay, further, as per the Companies Act, there's also a requirement on the part of the audit committee to review and monitor the auditor's independence. Therefore, audit committee requiring auditor to justify this independence is definitely within its purview. Yeah. So the thought process of the auditor here is definitely not appropriate here because it's something which is a regulatory requirement anyways. Okay. Now, next, you are auditor of a social media company. Of late, government has tightened the noose around companies operating in this segment by bringing in a maze of regulatory legislations to protect the interests of users. Yeah. How you can proceed to verify that the company is compliant with new regulatory requirements? So it's about compliance with the laws. Means the procedures you'll have to follow. Besides, what does the above situation underscore? Okay, for you as an auditor, how do you really go about it? Now, it needs to be verified that the company has put in place systems and procedures to meet these new regulatory requirements. Same can be verified by examining policies and procedures developed by the company in this regard, like devising the appropriate system of internal control. Okay, sensitizing the employees regarding new rules, engaging the legal advisors, etc. Yeah, so all of these things definitely need to be done. Further, financial stability of the company may be threatened due to new regulatory requirements. So the management may be under pressure. So it's also a fraud risk factor and may need to be evaluated therefore by the audit. Next, UVW and Associates, they happen to be the statutory auditors of Moon Limited. It's a listed company in respect of financial year 25-26. CA Udhav happens to be the engagement partner. He was of the understanding that as per the requirement of one of the essays, he has a responsibility to communicate following matters to TCWG. So I think it's all about communication with TCWG. Now, what is the understanding of the auditor here? Let's try to look at these points. Auditor's responsibility in relation to the audit of financial statements, planned scope and timing of audit, auditor's independence. Now the question arises that out of these matters, which of the matters are not, of course, one, whether these matters need to be included or not. And do we have some other matters also? Or are these the only matters? Yeah, so it's all about getting onto that list of the matters which need to be communicated. Yes or no? Yeah. So let's look at this. So when we talk about communication with those charged with governance, it deals with what? Auditor's responsibility to communicate with TCWG. Okay. Amongst various matters, one of the matters that is not mentioned in the list happens to be what? Significant findings from the audit. Yes or no? Yeah. So is that an important matter? No doubt. That's an important matter. Should that be communicated? Yes, no doubt. That should also be communicated. Now, with respect to such matter, auditor shall communicate with TCWG. Now, what is it the auditor will do? What is really required to be done? Auditors' views about significant qualitative aspects of entities' accounting practices, including accounting policies, accounting estimates, and financial statement disclosures. Okay. When applicable, auditor shall explain to TCWG why the auditor considers a significant accounting practice that is acceptable under applicable financial reporting framework not to be the most appropriate to particular circumstances. Yeah, why? Because each and every audit will have its own unique requirements, and audit is always entity specific. Yes or no? There are going to be some sort of procedures, you may say, which are going to arise. but they need to be tailored according to the requirements of the entity. So that's why such type of discussion has to be specific to what the entity will require, right? Next, significant difficulties. Now, it's very important for TCWG to know about. Why? Because it's not only about the outcome, it's the process which they need to check. Because as far as the financial reporting requirement is concerned, you can say audit is a part of that process. And if the process has some areas which require improvement, so how will that be possible? Only when it's been brought to the knowledge. And who is the one who's going to help the audit committee? Of course, the auditor. That's why the auditor is doing the audit. Unless all of those charged with governance are involved in managing the entity, significant matters arising during the audit that were discussed or subject to correspondence with management, written representations the auditor is requesting, right? So all of those things need to be put in place. Circumstances that affect the form and content of auditor's report. Any other significant matters arising during the audit, which of course, according to the auditor, are relevant. Communication of findings from the audit may include requesting further information from TCWG in order to complete the audit. See, why is this discussion meeting taking place? Because if there is anything missed out, if there is anything which is required to be looked at, that's been taken care of. So that's the purpose. That's the whole purpose around it. Yeah. So that's where it becomes important. Yeah. Next. During the audit of Indo Limited, so the company is Indo Limited, CA Harish observed that processing of accounting data was given to a third party on account of certain considerations. So there are reasons, cost reduction, on computer working to full capacity. Okay, so Indo Limited basically engaged a third party provider. So basically we are talking about a service organization here. So what was the role of service organization in respect of these areas? Record the transactions, process the related data. Now, what factors should CA Harish consider regarding the nature and extent of activities undertaken by service organization, so as to determine whether those activities are relevant to the audit, and if so, to assess their effect on the audit risk. Yeah, in line with the requirements of auditing standard, we need to discuss that. Okay, so it's all about auditors' considerations when a service organization is involved. Yeah, so that discussion that we had. So let's look at it. Now, of course, auditor will go about it in terms of obtaining the understanding, including the controls. And while conducting the audit, C. Harish will assess the effect on audit risk. Yeah. Fab Limited is availing the services of Atia Private Limited for its payroll operations. Now, once again, what do we have? service organization. Correct? Payroll cost accounts for 63% of total cost of Fab Limited. So what is the user entity? Fab Limited is the user entity. AAA Limited has provided type 2 report. So type 2 report which is required, it's been provided. AAA Private Limited has also outsourced a material part of payroll operation. Messrs. RST and Associates in such a way that RST and Associates is a sub-service organization to Fab Limited. So that also seems to be in place. Type 2 report which was provided by AAA was based on carve-out method as specified under SA 40. Right? Now, CA Akram, while reviewing the unmodified audit report drafted by his assistant, found that a reference has been made to the work done by the service auditor. Okay. CA Akram hence asked his assistant to remove such a reference and modify the report accordingly. Now you are required to basically discuss, comment whether CA Akram is correct in removing the reference of work done by service organization. Okay. Now, if you talk about CA Akram, so the contention of CA Akram in removing the reference of work done is in order. Yeah. User auditor cannot refer to the work done by the service auditor. Of course, it has to be the one which the user auditor needs to take the ownership about. Right? All right, so now let's look at the next one. Arihant Limited was engaged in the business of owning and managing hotels and resorts, selling tourism packages, performing airline bookings for the corporates and individuals. It appointed Upadhyay and Company as its statutory auditor for the financial year 25-26. So Arihant is the company, Upadhyay and Company is the statutory auditor. While planning the audit team decided that risk of improper revenue recognition from hotel business should not be treated as a fraud risk. Okay. This conclusion was based on the assessment of earlier years, wherein no fraud was identified in the revenue. So it seems to be a continuing audit. While testing the internal financial controls over the process of revenue recognition, it was identified that controls are not properly designed to mitigate the risk of fraud and risk of improper revenue recognition. As a result, audit team decided to perform additional substantive testing. Okay. However, audit team still were to the conclusion that there is no risk of fraud in the revenue recognition. During the course of substantive testing, it was identified that management did not account for revenue received from corporate hotel bookings amounting to 43 crore. Yes, that's an observation. Now, these amounts were partially received in the company's bank accounts and partially in the personal account of the CFO. So we have a situation of a fraud. Right? Amounts received in the bank account of the company were disclosed as advances received against the future bookings. In the light of above scenario, kindly guide the statutory auditors with respect to their responsibility relating to fraud in an audit of financial statement. Right? So let's look at this. Now, if you talk about auditors' responsibilities relating to fraud, alongside, if you look at this risk assessment, SA 315. Now, will the auditor be required to get into the risk assessment? No doubt. And in fact, that's a very, very important requirement. Yes or no? Auditors shall identify and assess the risk of material mistake due to fraud. Okay. And while getting into such assessment, auditors shall, based on a presumption that there are risk of fraud, evaluate which types of revenue transactions, assertions. So it's all assertion based. So that's why that thorough evaluation is required to be completed. Now, therefore, if you look at the requirements of SA 240 and 330, auditor should be doing what? Getting into the determination of responses to address such risks. Now, in the given case, presumption that there are risks of fraud in the revenue recognition may be rebutted. For example, auditor may conclude there is no risk of material misstatement due to fraud relating to revenue recognition in a case where there is a single type of simple revenue transaction. For example, leasehold income from a single unit rental property. However, when there is a complex revenue recognition structure, when there is a lack of control, then the probability of such fraud risk will only go up. Yes or no? It will only go up. Obtaining an understanding of the entity, its control is a continuous and dynamic process. Right? You don't only obtain the understanding, you also update that. Right? In the given scenario, company was earning revenue from multiple streams. And if you look at the controls, those were not properly designed. It was clearly evident. Okay. Then during the year, you talk about this fraud of 43 crore. Okay. Therefore, the auditor, while performing the risk assessment procedures, should consider the complexity and nature of the revenue for determining the fraud risk. Okay, of course, the control environment needs to be looked at. Audit team over here rebutted the fraud risk. Moreover, audit team should have recognized the fraud risk by identifying the deficiencies of internal control. Should have treated the risk of improper revenue recognition as a significant risk. So something which is a fraud risk will automatically become a significant risk. Yes or no? Now, on the top of it, when you have this fraud, so the fraud will also have the reporting requirements. Yeah. So such reporting requirement should also have been taken care of by auditor in the given situation. Yeah. Now, all right. So now let's look at this one. Alpha Manufacturing Limited is engaged in the production of specialty machinery for the automotive industry. Company operates in a competitive market under pressure to meet the aggressive revenue and profitability targets. Now, this part is important. Audit firm Beta LLP has been engaged to conduct the audit of the company for 25-26. Beta LLP performed the risk assessment procedures related activities towards obtaining information in identifying the risk of material misstatement due to fraud, and also evaluated whether there is any indication that one or more fraud risk factors are present. Analytical procedures were also performed. They revealed unexpected relationships potentially indicating fraudulent activities, such as inflation, sales were inflated, okay, to meet the earning targets. Management is inflating sales by entering into sales agreements that include terms that preclude revenue recognition or by invoicing sales before delivery. Okay, now in this case, Guide Beta Limited to decide the course of action in determining the overall responses to address the risk of material misstatement due to fraud at the financial statement level and a section level. Now in this case, what do? You will get into the detailed assessment. So at the time of your detailed assessment, what do? You will evaluate what are the factors. You will get into the understanding of the business, understanding of the activities which are there, the controls which are associated with them. Okay, and you find there is a weakness there. Yeah, so the moment you find there is a weakness there, what is a you can say that's a red flag. That's a red flag for you, right? So that's something which is an important consideration there, right? So now let's look at one. Okay, yeah, so let's look at this one. As per SA 40, fraud risk factors are the events that indicate incentive, pressure to commit fraud, provide an opportunity to commit fraud. Now, what are the specific fraud risk factors present in Alpha Tech Limited? There are incentives or pressures. Significant portion of senior management's compensation is tied to unrealistic profitability targets. Yeah. Companies' financial results show rapid, unusual profitability when you compare to competitors. Financial stability or profitability is threatened by economic, industry, entity operating conditions. So there's a high degree of competition, market saturation, because of which you have declining margins. Then you talk about these opportunities. So there are unusual, complex transactions very close to year end. There's a high turnover of senior management, legal counsel in the past year. Yeah. So all of these factors are very, very important. Yes or no? Next. PMP Industries Limited is a listed manufacturing company. CAF is the statutory auditor. During the course of audit, CAF and his audit team made the following observations. Fictitious sales, missing inventory. Okay. Now, this was communicated to the management TCWG. Instead of making the corrections, MD threatened legal action if the disclosures are made in the report. Okay. Now, CAF finds it difficult to continue the audit engagement due to these exceptional circumstances. Now, what should he do? In the given case, CAF has identified material misstatement arising from fraud, right? Yeah, undoubtedly. Despite due communication, both the management and TCWG have refused to take corrective action. Further, you see this MD of the company attempting to intimidate the auditor by threatening the legal action, which is a serious concern. So these circumstances clearly constitute exceptional circumstances that cast serious doubt on auditor's ability to continue. Why? Because there is integrity, independence, which gets questioned. Yeah. So accordingly, CAF should take the above mentioned actions in compliance with SA 240. Right? Clear on this? All right. So with this, we are through for our discussion for today, and we can just close this session. All right. So thanks once again for your time today. Ashok, we can close this now.